So what is an index fund? Well, the very simple definition is it is a giant list of companies that you own a tiny slice of each company. So in this way, you can own part of every company that is listed in a certain stock market, a certain country, a certain place. That's the very simple definition, is you're buying a giant list of companies.
And the most diverse way to invest is in a global fund, meaning that you are buying companies in lots of different countries. And when I say diverse, I mean putting your eggs in multiple baskets, not just putting all your eggs in the UK stock market because I happen to be from the UK, I'll buy a UK companies. No, this means spreading your money and your investments over all the countries in the world that you're able to.
So the one we invest in, and one of the biggest funds out there, is the ftse Global All Cap. And there are around about 7,000 companies around the world that you invest in when you buy this index fund. And it's made up of all these different countries as well, which Katie has a visualization to show you so that you can see what this looks like.
I love graphs.
Who doesn't love graphs?
So first of all, if you look at this map, you can see how the investments, if you buy this fund, are spread out around the world. And the US is such a big economy with lots of the biggest companies in the world. I'm sure you're familiar with lots of American companies. We keep mentioning Amazon, Facebook,
Tesla,
Google, Visa, a lot of all the big banking ones as well. So many companies, and they're so big that the US alone makes up 57% of the fund. So if you put £100 in the fund, 57 of those pounds are going towards US companies, towards you owning US companies. Then elsewhere, if you look at the UK actually only makes up about 3.8% of the fund itself. So if you were to just put all your money in the UK, you're only buying like 4% of what's available around the world.
It's called home country bias. And what people do is they invest in their country because they know it. So it'd be an example, we're here in Colombia right now. The example would be people only invest in Colombian companies because that's what they know. But Colombia makes up such a small portion, like the UK, of the global economy. You're missing out if you only invest in your country. That's why we talk about global index funds.
So let's go now and look more at the companies that are in those countries to try and help you to understand how this works. How is it possible to own 7,000 companies at once? So this graph that we've done here shows you all the different companies, and each block is one company. So you can see this massive dark blue box here. That's the US company, so that's 57%, just over half of the whole index. And then for each square, you can see these different companies. So the biggest company that we've got here is Apple, which makes up just over 3% of the fund. So when you put your £100 in to buy these companies, £3 goes towards Amazon. And you can just see how many different companies there are. So each colour represents a different country. So you can see the dark blue here is the US that we spoke about, making up over half of the whole fund. Then we've got Japan here in the light blue, and then China in the orange. And you can just start to see how this works, how we have 7,000 different companies and how they're spread out around the world.
So that is a visualization of what an index fund actually is, and if you invest it, where your money actually disappears to. And the idea is you own all of these different companies across the world, and they are working for you. So every day their staff go to work, they do their job, they produce a profit, they sell products, they make money, and that profit is then distributed to the shareholders, the people who actually own those companies. So when you think of it like that, if you buy an index fund, you're buying a slice of 7,000 companies who have the smartest people working for them, and they're all working to generate profit to reward you for investing in them. What a fantastic thing.
Where do you actually buy index funds? Are there people that make them? Like, where do you go to get them?
There are so many different places. There's Fidelity, there's Schwab, there's all sorts of different index fund providers. The one we use and talk about most regularly is Vanguard for many reasons. Vanguard sell very broad-based, very inexpensive index funds. The fees or the annual management charge that you will pay is incredibly low. A lot of our money is in one called the ftse Developed World, excluding the UK. That's one of the funds we buy. We buy it directly from Vanguard. You put your money into there, you buy it in a pension, an ISA, a 401k, a Roth, and you own the index fund within there. So you can go to Vanguard or any of the other providers and directly buy an index fund.
There's lots of terms that we've probably mentioned in this video that you're scratching your head saying, what on earth is that? A little bit of knowledge is a dangerous thing. Please go away and do some reading on this and some research. We have our set of articles on alandonegan.com/investing where you can learn a lot more about this.
So many of you who are watching this video aren't subscribed to the channel. There's totally no pressure at all, but it would mean a lot if you subscribe to the channel. It would be awesome. So you've worked out what an index fund is, you're ready to go, but the question comes up, am I too old to invest? Watch that video next, which breaks down the age to start investing. And after you've watched that, watch the video, how to invest your first 100 into the stock market.